Welcome back to REI Accounting Talk, where we love to talk everything about accounting for real estate investors. I am recording this episode with my co-host Kat. Welcome back.
Hi, everyone. I'm
We
Kat.
wanted to talk everything about taxes today, everyone's favorite subject. I feel like there are so many amazing people out there giving lots of information about taxes. But it also can become very, very overwhelming and very noisy. And they also dive into some really deep tax strategy without talking like high level stuff of how it all kind of trickles down. So that's kind of what I wanted to about today. I don't want to get into the weeds about like the short term rental loophole and cost segregations and all that other stuff. Just more on a high level you know basis about taxes in general and what it means when somebody says, I don't pay any taxes. I think we all hear that a lot is this is how I paid no taxes. And when people say that, they usually mean I didn't pay any federal income taxes. Kat, do you want to go over with some other things about what taxes they might pay other than federal income tax?
Yeah, this is a big topic for me because I hate it when gurus come out there and talk about it without really specifying like what that means. So we pay property taxes, we pay lodging taxes. There's so many taxes that we pay. So as real estate investors, we do pay more taxes than a normal person because we have the business, right? There's like states that have like what do they call? In Tennessee, for example, we
Mhm.
pay franchise tax. That has nothing, you can't waive that. So there's like all these little things that you get charged for, but we forget about it because it's not in your tax return, um, or it's named differently. But also, one big rant that I have about this is that people make it seem like you buy a property and automatically you pay no taxes at all, right? And that is really not always the case. So I really also think that we need to kind of touch on that misconception that one property will immediately set you free from taxes and then you are going to be disappointed. Yes, it does help with taxes, but not always going to completely disappear your taxes, especially because tax strategy costs so much money sometimes that it sometimes the savings will not justify the cost
Totally.
of a tax
I was just
strategy.
thinking of that. Like you can pay upwards of, 20,000 plus dollars to, secure a meeting with a very good tax strategist. But if you're just brand new starting out, it may take you years to offset that expense with your tax savings. So, got to be careful about spending that money and when's the right time to actually hire a tax strategist and everything. But um as Kat was saying, there are so many other hidden taxes that we forget to pro forma when we're doing due diligence on a property. And you're running the numbers and you're like, okay, I'm getting this much, and nobody puts taxes in there because, oh, we got all these loopholes and we're going to be able to write everything off through depreciation and all this other stuff. But they forget about what you were talking about, the property taxes, the franchise taxes, and they can be pretty, insurmountable in some states. I've seen some clients in it's Ohio, that have bought something and they get reassessed in property taxes upon the purchase, and so their property taxes go up 2 to 300% of what it was the year before they bought it, because the people they bought it from had had it for 50 years and it had never had that bump in assessment. And so you have to like be very careful when looking at taxes and not just thinking about like, I'm not going to pay any income taxes because I got all these tax strategies down and all that. You got the capital gains tax that can sneak up on you if you use a tax strategy incorrectly. You have to recapture some of those taxes that you wrote off, and so it you can get very, very deep into the weeds in this subject, but that's kind of where everything is. Do you have anything to add?
Yeah, that the recapture really is a big trap that gets a lot of people. Like I I did a cost segregation for one of my properties, and I'm actually in the process of trying to sell it. And I did this like I bought this property 3 years ago, so I wrote off, and I was super excited. I got a huge refund. Like it was me, it was great. Like I didn't pay any taxes. I thought, and then now I'm selling, and I'm looking at the numbers of how much taxes I could pay. And it's like, okay, you really got to think about those things like that, like not letting, the media and all that stuff talk about like, well, you could write up everything, but think ahead of what that could consider and also ask questions to the tax preparer about that. Um, because, we get all carried away with this no taxes, and then we realize that it's
I
going
would
to caught
love
up
to do
to us
another
at some point.
episode when you close on that and you do your tax return next year. We could do a high level, like this is the
Oh,
net effect of selling before it's fully depreciated when you did that. If you want to be tortured
yeah.
that way.
Yeah. I like,
We could do
I mean, I've estimated, and it's
um,
$20,000 that we estimate we're going to have to pay in taxes just because we wrote off like so much
okay.
depreciation. So yeah, there's the little traps that you got to ask whenever you see things on social media. Think about like, okay, but what is the other side of this? And knowing that, okay, if I sell, I'm going to have to probably pay taxes on those write-offs, but then like you could always do like I could do a 1031 exchange and all these different strategies that I talk about, but I'm not. That's not where I'm at right now. So sadly, I'll be paying taxes. So do you do your tax returns? So they come back to zero or refunds all the time, Sarah? Just
No.
curious.
This is the first year. Well, my husband had his W-2 halfway through this year, so this will be the first year. We get it pretty low, but not absolutely zero. Um, and we haven't
Yeah.
used um cost segregation or bonus depreciation yet. Thankfully, we've had um actual losses in different ways, but no, we haven't had it completely. Do you usually have a zero return?
Um, I actually just had zero returns the last 2 years. Before that, we didn't. I mean, we would have to have written off so much for us to do that. And then it all comes down to like lending, right? Like how much do you want to write off if you're also borrowing money and you want
Yeah.
to show some income? Because I had trouble with lenders not adding back depreciation to give me back the income. And I was like, but that's not real expense. And they were like, well, I don't care. Your income
Yeah.
section is too low. So we're also really careful about not writing off too much for
And that's
financial
that's essentially
funds and
what we were doing it
lending.
for too, is because businesses weren't seasoned enough yet to show a P&L to cover for that. But yeah, and that's a huge point too, that I think when people are big into the tax strategy and everything, they don't realize that um that could hurt them, writing all that off at one time. It could affect them. Um, if you have
Yeah. Yeah. Especially when you like quit your job and you no longer have a W-2 job, it becomes really important for you to show that you're bankable in some profit and loss. So yeah, you got to balance
Yeah.
out sometimes.
And if you have a great network of private money lenders, that could help you out to cover during those years, but we don't all have that luxury. I'm too scared to ask anybody for private money. I've never done it myself. But there's some great people out there. But anyways, so just a quick recap. When somebody says, "Oh, I pay no taxes," they probably do pay a lot of taxes. They're referring to federal income taxes and using those tax strategies. States, sometimes they can be tricky and they don't recognize some of that. You got to be very careful there, or not as much. And every state is different, so you've got to just like dial that in and make sure it's going to be good for you all across the board. So you have the capital gains taxes, you have the state taxes, the depreciation recapture. I don't think we talked. I think in some cases you could do you could be charged with a self employment tax if you flip houses or you don't you do the short term rentals and you don't do that like by the book like it's supposed to be. But yeah, there's some instances you could be charged for the self-employment tax, the state income tax. We talked about property taxes are probably the biggest one. I think property taxes are a huge line item for a lot of my clients and they keep going up and going up and going up. Um, and like you were talking about the franchise
Yeah.
taxes, the lodging taxes, state and the local taxes for the lodging. On top of it, you got to in our community, you have to take a check down there every month. It's a pain in the butt, but anyways. And then if you don't,
Yeah,
go
and
ahead.
then they're like the licenses, those are a form
Oh
of
yeah,
taxes that you also have to pay because in they're separate from like some states and some like counties have like occupancy licenses for like even long-term rentals, not just short-term rentals. And a lot of times people don't even realize that. Like in Georgia, we don't have it, so I never thought about it. And then somebody told me that, right across the border in Alabama, you do have to pay some of that. So
yeah.
I was
I
like,
think they're
huh.
passing more stuff like
Oh.
that, so making it more regulated and everything too. So, got to be careful about those taxes. So that was just a quick overview of taxes. There are lots of people out there with great information that go really in depth about taxes, and you can hit us up on Instagram, and we can tell you our favorite people to follow on there if you need to go in more depth about it. We don't prepare taxes, so we are probably not the experts in all the full fine details because you could take one short-term rental tax strategy for two people and you could end up in completely different places by the end because there's so many ifs ands or buts when you're implementing those and it could go so many different ways. So make sure you ask your tax preparers. And I want to also caveat this: none of this information in here is tax advice from us. We are just educating and sharing our thoughts and opinions with you about the situation. And speaking of, that triggered something in my head. I hear a lot of people now going to Chat GPT for tax advice. And Kat, I don't know if you've noticed this, but my Chat GPT has become very dumb in the past 6 months. Like I feel like it was
Oh
really
my
good at the
God.
beginning,
Yes.
and now I'm like, you need to rerun those numbers because that doesn't make sense at all. Oh, thanks for catching that, and da 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 da. And they rerun them, and they're still wrong. And I'm like, okay, ChatGPT is not doing it for me much anymore. So be very, very careful when you ask ChatGPT for tax advice because I just don't feel like I, did you feel that way? Did you feel like it was really good at the beginning and then all of a sudden it's kind of beginning to be dumber now?
Yeah, so I think they released a new version because I was actually working on content and it came back with like some inaccurate stuff and I'm like, listen, girl, this is not right. This is incorrect. So I had to like correct all these things and it's like, where is she getting this facts? Mine's a she, by the way. And I was like, yeah, I don't know what's going on. So you really have to be careful. And all these people now that I think they're lawyers and attorneys because of ChatGPT, I'm like, you really gotta be careful because she's not always right. I don't know, like I think it's just there's so much information that it grabs from the big like database, but we're feeding the database. So if people are feeding the database, then she's not gonna get the information right. So just be really careful with that. I always so in my opinion, I don't know how you feel about this, but I feel that once you start investing in real estate, you should hire a tax professional. TurboTax and HR and Block. I don't think they do it at that point.
Oh,
What are your thoughts on
absolutely.
that?
I feel like You should 100% get someone to look at your whole entire situation, not just your portfolio and what you're looking at buying. They need to know about your inheritance from your Aunt Sally 2 years ago, and they need to know about your husband's side hustle as an underwater basket weaver. Whatever may happen, they have to look at your whole entire situation, not just what you plan on, that not just that you work and you have a high income job and you trying to use the short term tax loophole, because there could be something out there that you don't even need the short term tax rental loophole because you've already got this business over here doing this, and maybe you could do something different with that. So 100%, I feel like tax strategists are worth their money. I mentioned earlier you could pay 20 plus thousand dollars. That wasn't a knock on somebody charging $20,000. It is absolutely worth it, but um, a lot of times it may not be worth it in your first year. It may be a couple of years before you actually can, see benefits from using those tax strategies, because you may not be able to buy a short-term rental and get everything done by the end of the year, if it's towards the end of the year, and it may be next year or the year after before you can start doing that. But just be aware of all of that. There are some tax strategists that probably aren't as much, and you could definitely find someone local to see if they're, you know, versed in tax strategy. Just ask them a bunch of
Yeah.
questions. Ask, ask, ask. You need to interview them just as much as they interview to be a client. It needs to go both ways.
Yeah, I found some like real estate investor friendly like tax preparers. They're not specialized in strategy, but they know a little bit because they have several clients and they can be affordable. Mine specifically, I paid $3,000 a year. But before that, I couldn't afford all that. So I had somebody that, I paid like 1,000 or so. So it really just varies. You won't know until you start finding people and ask around how
Yeah,
much it's going to cost you.
absolutely. And if you are high six figure earners, then yes, it is probably going to be worth it to pay that money in the first year so you can get that going over the next year and a half, 2 years to get that done. So again, not tax advice,
Yeah.
but just our opinions and from our education and real life studies here. Um, oh, the biggest thing there, because I do own a bookkeeping company. Um, Bookkeeping is my passion. The financial statements, I love digging down into them and looking at them. Um, my personal opinion is that bookkeeping is your biggest tax strategy to use to your advantage. If you don't have your bookkeeping done, it's not worth anything. If you don't have any bookkeeping done, it's not worth it to meet with someone for, 5 figures for a tax strategy meeting. You need to have all of that done and ready to go to your tax strategy meeting before you do anything big there.
Yeah. Yeah, I don't have a bookkeeping firm, but I'll tell you that I'll 100% agree with what you just said because what are you going to take? If you don't have books to provide, then there's really
Yeah,
no strategy to be made. So it all starts with the
yeah.
books.
And I've seen people, spend multiple 5 figure, like 20, $30,000 on a coach, not a tax strategist, on a coach, but they won't spend that on tax strategy or bookkeeping. And I'm like, oh, we've got to get your priorities lined up here. There are some coach that will help you and that will get that for you return on you. They're not all bad. But we also need to get in line with our bookkeeping and stuff too. I could go all day on that. Anyways, that's our
Yeah, me too.
that's our quick take on taxes, and everybody out there telling you they pay no taxes. They do pay taxes. They do pay taxes somewhere down the line. It's usually no federal income taxes, the strategy they're using there, but they still fund your local roads. They still fund your local governments. They still fund, um, you know, local food banks. You still are an active participant in the community that you buy in, even if you buy, in out of state and whatever. So you are a very active participant if you are a real estate investment uh, professional. Because it's
Which is
not a
not a
bad
bad
thing.
thing,
It's
right?
not a bad thing, but we do provide. All right. Well, that's going to wrap up this episode of taxes. I'll put our Instagram handles in the show notes. Let us know what you want to talk about, what you want to hear about. We'll be posting some Ask Me Anythings in our stories so we can get some questions of you um, from you and answer your questions right here and talk about all things that you want to talk about. So, Kat, thank you for joining me as always. I enjoy chatting with you.
Nice to, yes, nice to be back,
Sounds
and
good.
I'll see you next
Thanks.
time.